Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like our 22 SPY and ES systems, and of course our famous KISS trend systems, which are exclusive to Breakpoint Trades. Pretty amazing stuff. No one else has them. I'll discuss those a little bit more in this video. Also, markets had a good rally this week. We favored an upside, so I want to give you guys an update since my last video on the weekend. So let's get started here. Again, this is a comprehensive state of the market newsletter for August 30th, 2023, and this is our back-end recorder. So I'm going to go ahead and get things started here. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, August 30th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections, same general theme as we always keep. One thing I'm going to discuss tonight is some KISS systems, and I'm going to show you some statistics. I'm actually working on some pretty big things with these systems. I know a lot of you have been really enjoying them. The KISS system tables, how they update every day. They send you automatic emails. But I have some cool stuff I'm working on, and I want to show you some stats. As far as the market this week, as you know, we've had a nice follow-through rally this week, following through on last week's rally. Remember, on my weekend newsletter, I did favor that we would push higher, and that's what's happened. And the market is now retraced slightly past that 61.8% fib target I had on the S&P, which was up around 4,500. All right, so far for the week, the S&P and Qs are up about 2.5% to 3.5% respectively, so nice week. As far as the market scenarios, guys, really no changes. Really everything remains in place. One scenario, the bulls, wave 4, low completed on August 18th. The other option is that wave 4 low did complete on the 18th, but we're soon going to get another pullback to form a higher low. Yet another option would be that wave 4 is not complete, that we're still in a wave B of 4, and it forms a lower high, or it may even go all the way up and nearly retrace this move down from July, sort of like a double top. That would be like a bear trap because all the institutions, everyone would be back long. And then we go down again in wave C into September, typical seasonality. We'll see which unfolds. We play it level to level. And of course, we have our systems. We could just follow them. By the way, the Q's KISS system went back long today. Otherwise, again, as you know, this week precedes a 3-day holiday weekend with Labor Day. So usually, my 25 years of trading the markets are almost always up preceding a 3-day weekend. Usually the markets hold up because volume's lighter. A lot of the pros take off, go to the Hamptons. Volume gets lighter and lighter, and generally there's a good mood before a holiday. Remember, markets are all about psychology, and usually if there's going to be a pullback, it's following the holiday. Also, the last 3 days of August are typically very bullish, and so far that's been the case. Remember, guys, we have the jobs report on Friday, and as you know, now bad news is good news until it's not. Let's move on. Item number 2 shows the index sector table, what transpired today and this week. Again, today we had slight gains, anywhere from, say, 0.1% on the Dow, 0.4% on the S&P, about 0.5% on the NASDAQ. But for the week, solid gains here. The Dow's up the least, up about 1.5%. S&P is up 2.5%. NASDAQ's up over 3%. So nice gains this week. As far as the 21 sectors here, most were up today, but a few handful were down, though they were down small. And for the week, everything's up except for utilities. U.S. dollars had a nice pullback this week. It's pulled back off that supply zones, down 0.9%. That has helped the market. The other thing that's helped the market this week is the pullback in the 10-year Treasury yield and the rally on the 20-year bonds. Cryptocurrencies were weak today, but they are up for the week. And we had some really nice trade ideas in some of the stocks, such as Mara, Riot, and Wolf. Hope you got caught those. Today they had consolidations. Commodities are mostly to the upside today, except for corn, which I'm not showing, and sugar. Big day for natural gas, crude oil up just slightly. Precious metals were mostly down. The gold was up just a quarter, but silver was down, and the stocks were slightly down. But for the week, everything's up nicely. And like I said, this week we've had a nice pullback in the 10-year Treasury yield. That's helped the markets too. Next, item number 3 shows the economic news calendar. Tomorrow, Thursday, August 31st, last day of the month, we have those initial jobless claims and Chicago PMI, PCE prices, all that's important, and natural gas inventories. And of course, Friday is the big non-farm job payroll report. We'll see how that comes. They've been revising the jobs numbers, past numbers down. Market kind of likes that because the market ultimately still has this recency bias. They really want the Fed to stall their rate hikes. But anyway, let's move on. Now, before we get to the major index analysis, let's talk about some of these systems. Let's talk about the KISS trend systems. As you know, these have been a part of the website for a couple of years, and this year we released the very popular KISS tables where we have, I think, 650 different symbols that are updated once a day. You can go there, set favorites, get automatic email notifications. The KISS systems are a proprietary trend following long only system that I developed a couple years ago that's basically not curve fit and can be applied to virtually any instrument. Again, it's long only. It holds positions in stocks, indexes, and over time raises what we call a smart trailing stop. So it gives you an exit plan and allows you to participate in a trend with a nice protective stop that adjusts along the way. We call it smart trailing stop. Anyway, so here's an example of some statistics. So on the left here is the triple Qs on the KISS system, and this is the report from TradeStation. Now, what net profit here, I have it set to take each entry as $10,000. I do that because then the net profit here is what the system is up. So for example, this year the system will be up 27.3%. Okay, and that's a little behind what the Nasdaq is up, but as I'll show you on the statistics, the KISS system actually beats buy and hold in most years. So for 2022, as you know, the triple Qs lost 32.5%. The KISS system would have lost 9.5%. So that's quite a difference there. That's around 23-24% difference to the positive side. And the big thing is the drawdown. So, I think the max drawdown was 7% for the KISS system, and that's what it is over all these years, 7%, the max. Well, the max drawdown in triple Qs was 35% in 2022. Okay. So the beauty of the KISS systems is that you can capture the returns of the buy and hold, or even more so, but you only have drawdowns of 5 and 7% to deal with. Remember, on buy and hold, the Qs will have typical drawdowns of 20%, 30% a year. That's very common. But with the KISS system, you don't go through that. And of course, something like 2008, was a lot even more. Let's take a look at some other numbers. So 2021, KISS system would have made about 22.5%. Buy and hold would have made 27.4%. So buy and hold beat a little bit there. 2020, 61% the KISS system made. Buy and hold made 48.6%. So obviously beat KISS system one there. 2019, 40.7% gain. KISS system, or the buy and hold, would have made about 39%, so it made a little bit more. So again, you can see all these different years, and 2008, for example, KISS system would have made 7.3%, versus the S&P, or versus the Qs would have lost 41.7%. So that's like 37% difference on a positive note on the KISS system. And again, you only had a very low drawdown, 4% that year, versus the triple Qs, which lost 41.7% in 2008, but they were down about 50% drawdown. So that's the beauty of the KISS system, guys, is even on years when it doesn't beat buy and hold, you don't get the drawdown. You get to avoid that emotional, scary drawdown. So pretty damn cool. I'm not going to say this is holy grail material, but it's pretty damn impressive. No one else has it, and that's why you should be subscribed to Breakpoint Trades. I do have some other cool stuff coming in the future. I'm always working on things, so anyway, just giving you an update on that. Let's move on. So let me zoom out on this image. Let's look at some other systems. So here's the KISS systems on the weekly, and again, apologize on the video here. These images are quite small, but as you know, on the weekly KISS systems, again, they're wider than the daily. And I don't have any stats for these to show you right now, but anyway, the weekly have wider stops, as you know, and none of the stops were hit on the weekly. So the S&P, wasn't hit. None of these were hit. In fact, we got a new smart trailing stop on the triple Qs weekly this week so far. And by the way, the IWM actually went long here this week. Okay. Next. Zoom back out. So chart number 6 here is, I'm going to move this over a bit. This is the daily view of the 4 major index KISS systems. So you can see the triple Qs went back long today, as you can see. Remember, they had stopped out in early August there. Same with the S&P, same with IWM, same with DIA. But notice, again, we've had a nice bounce over the last 2 weeks. Again, notice how these DeMarcs all lined up. We had a DeMarc 13 at the low on August 13th. Same for IWM, same for triple Qs. And lo and behold, we've rallied from there. Okay, you can see the S&P is right up against this ATR, triple Q is a little above it. The other ones are just below it. So again, like I said, scenarios are the fourth wave may be complete. We may go to a new high. If so, this trade will be decent. Or like I said, this wave 4 may still be unfolding. But that's what the KISS systems look like at the moment. Let me show you another example. Here's the KISS system on a half-day SPY chart. I don't have this on the website, but you can see some of the trades. So each candlestick is a half a day, so there's 2 candlesticks in a day. You can see this would have went long on August 23rd right there. Pretty good entry, as you can see. Next. Move this up. Let's go ahead and move back to the general market analysis. So image number 8 shows you the 5 key major indexes with the Bollinger Bands. Again, nice rally the last couple weeks. As you know, coming into early last week, we were extremely oversold. We were due for a rally, and that's what we got. Okay, we were S&P and NASDAQ were below the lower Bollinger Bands. We had McClellan oscillators outside their Bollinger Bands. Everything was stretched, and we've had a nice mean reversion to bounce. And again, we'll see. The lows could be in, or this could be setting up a bear trap. We'll see. Next. Chart number 9, here's the Dow. Again, the Dow rallied right off this trend line that I had in place. So this was actually a low risk area to take a long, and I talked about that. You can see the little slight 5 RSI divergence. Here I added fibs, so far the Dow retraced, and it's pulled back a little from that 61 fib. Again, you would have had a nice trade from that trend line, even just the 61 fib. It was very objective here at the trend line, but you could have had a tight stop. Next. Chart number 10, here's a weekly view of the S&P. Again, up 2.5% for the week. Nice rebound. You can see how the RSI rebounded off this trend line, which is very important going forward. Remember, draw trend lines on the RSI 14 when you can. This here shows you, this is a possible time symmetry indicator. And if we do have another pullback, this shows a low sometime in mid-September, which would work out with seasonality. But again, nice rally here this week so far. But again, we'll see if it forms a lower high. I still think we're going to get a lower high to put a gun to my head. But again, I'll play whatever unfolds. And that's how the market is, guys. You don't have to know exactly what's going to happen. You just pick your spots, you have your stops, your targets, and you adjust. Okay, it's not about having a crystal ball and knowing exactly what's happening. It's about seeing entries near support that you can take positions on with tight stops, being able to adjust on the fly. Next. Chart 11, here's the daily view of the S&P. Again, remember 2 weeks ago we got near this big support zone. And we didn't quite tag it, but we got close enough for government work, let's say, especially these days with how the government works. But anyway, nice bounce so far. We retraced just over the 61.8 fib. Let's see. Also, another point I want to talk about, the 60 link stochastic. Remember, I said a week ago, 2 weeks ago, this 50% area would be an area where we could see a rally from, and that's what it's transpired. Next. Chart 12, here's a daily zoomed in view of the S&P. As you know, we stalled at the top portion of that channel in late July. That was a good area to take some profits, exit. And then we had a confirmed sell signal on this RSI trendline break, basically the first day or two of August. Nice correction. We came all the way to the bottom of this demand zone. We rallied right off of it. So far, we have two waves up here, essentially. It could be like an ABC. You can see we're slightly above the 61.8 fib. Also, you can see how the 60 stochastic. Look how it came down perfectly to the 50% and bounced off of it. Next. Chart 13, here's the other view. This shows you these different wave counts. Major top wave CN, which we're not on board with. Last peak of a wave 3, which we think is possible. Likely some sort of wave 4 pullback now, which again, as I already stated, wave 4 low could be in place here, and we go back to the highs. One option would be pulling back, rallying, or going straight up to the highs, or pulling back and then rallying up to highs. Yet another option is forming a lower high, or even getting close to a double top, kind of a bear trap, and then come down. So we'll see overall what unfolds, but all options remain on the table. Next. Chart 14, here's the daily KISS system for the S&P. Again, nice trade from March to early August. And for now, the daily is still flat. Again, the weekly KISS is long. Someone asked me, well, which one do I do? Well, I know that some guys here will trade both. I know one individual, he uses 50% of his capital for the daily and 50% of his capital for the weekly. So there's various options you guys can do. No real one option fits everyone's risk tolerance and goals, so you just have to decide, but we have the tools here for you to use. Next. Image number 15. Now I want to show you something interesting. This is UPRO on the KISS system. You can see UPRO went long, about a week ago. Why did UPRO go long but SPY didn't? Well, it's because of the differences, and UPRO is a triple ETF and it's more volatile, and so that sets the indicators different, and that's an example where that went long early. But what SPY and S&P cash did not. Next. Chart 16, here's the 4 time frames we like to follow. So again, the daily up here, the upper left. Remember, I talked about the DeMark 13. Look how we bounced right from there. We're now into this ATR. Of course, price bounced off. The 60 stochastic bounced off the 50% area. We had a DeMark 9 on a half day. That played out. And then on the 130 minute, DeMark 9, 13. You see how that lined up for a low back on August 18th. All these DeMarks and everything. Moving averages were wide. Remember, I talked about that on my newsletters. So anyway, price rallied up, pulled back on the 130 minute. Remember, it found support on the ATR, which I said was bullish and why we were looking for a higher low, and it ended up manifesting. Now, short term, guys, we are quite extended. Look at these short term charts. We have a DeMark 13 and an A on the 78 minute. That's the amateur buying. So we are a bit stretched here short term. You can see it on the moving average ribbons. Next. Chart 17, here's the half day chart. Again, shows you the similar view as that daily. We bounced off this demand zone. We got all the way into it. And we've had a nice retracement here. Next. Chart 18, here's the 60-minute chart. Again, we blew through this 61.8 fib. The other area that could be, if we still form a lower high, could be this zone up here, this kind of a supply zone. And to think about it, that's almost back to the highs. That would suck in a lot of bulls. They ever want to be back long again. That would actually be an idealized bear trap because everyone would get long there. And, think about the market likes to cause max pain. If we had a little pullback and we got into here, everyone's long, and then we dump in September. That's an option to consider, guys. Just, sometimes the market likes to screw the masses. And anyway, something to think about. Chart 19, here's the 30-minute chart with the wave count we've been shown. Again, as you know, we were counting. We favored another move up higher in C, a higher low, and we got a higher low. Yes, it retraced a lot, but we did get a higher low. Again, the option here is this is a wave C, or the bullish option, like I said, is that we put in a wave 4 low, and we're now in a wave 3. This was a 1, 2, 3. So it's either a C or a 3. All right. Again, this is a holiday, kind of a, we have the 3-day weekend coming. Like markets usually hold up into that. I think this will be decided next week after the holiday. Finally, chart 20, here's a 15-minute chart. Again, heck of a rally. We even exceeded symmetry here. Little sideways action today. Is that a little ascending triangle forming or not? We'll see. Finally, chart 21, here's a 5-minute chart. Again, S&P was up, like I said, 17 points today, but really you could see it was just chopping sideways up and down most of the day. Basically, even though it was an up day slightly, it was more of a consolidation day from yesterday's big trend day. Next, chart 22, here's the NASDAQ. And again, nice rally off this demand zone. We didn't break long-term symmetry, as I discussed. Largest pullback since the Q's bottom was about just over 36 points. So far, the pullback off the highs was only 33. One thing to watch is this trend line. Remember, this uptrend line. Another possibility, guys, for the bears is tagging this trend line and then coming down. So it is one thing to consider. I always like to extend those trend lines out, as you know, because they're still important. Next. Chart 23, here's the other daily chart. Again, we broke this little trend line that we had, perfectly back tested. I talked about that on on the weekend. Bounced off of it. That was actually a good area to go long. And we've cleared out these moving averages. The positive on the market is we're above the 50-day moving averages now. Remember, we were below them before. Next. Chart 24, here's the half-day chart with the fibs. Again, we're just over that 61.8 fib, as you know. Finally, chart 25, here's a 15-minute chart, potential wave count that Steve labeled. So again, you don't need to get too caught up into these wave counts, but one possible count is that we're in some sort of wave 3 here of 5, and we'll get a wave 4 pullback soon, but then another move up higher in 5. Next, chart 26, here's the KISS trend system, which went back long today. Got back in slightly above where it got out. Again, that happens sometimes. Again, a lot of times the KISS system will get back in earlier or lower prices, better prices, but not always. Next, chart 27, here's the 4 time frames. Again, very similar to the S&P. Had those DeMark 13s at the lows a couple weeks ago. And very short term, we have a little DeMark 13 and A on the 78 minutes. So a little stretched here short term. Next, chart 28, here's IWM. Again, nice rally off this demand zone right into the 50-day moving average. It was a good long there. I talked about that last week and on the weekend. Next, chart 29, here's the weekly view showing this coil, how we've bounced off this demand zone so far. Next, let's take a look at some of these stocks I've been covering. Here's Apple. As you know, Apple, I've been favoring this wave B, and we've rallied up now, at least to the minimum target of my wave B. I've talked about that I was looking to go short. I have not shorted it, okay? I need a trigger of some sort. Here's a couple options, guys. We either go up, this was wave 4 low, and we're going to go up to another high, like it shows in green, or we're going to pull back soon for the wave C, go straight down, or we pull back from a higher low, then go up and either make a new high or put out the B here and then come down. I know it's a little complicated, but again, when we were down here, I favored a rally up in wave B, which we've gotten. So it's giving you a very nice trade. And now I'm just going to keep an eye on it. There is a gap here that could be a magnet too to fill. Next. Chapter 31, here's the 2-hour view with the fibs. You know, we had that beautiful MACD divergence at the lows. And remember, my target initially was the 61 fib, which we've gotten to. So that was a great trade if you bought this down here. Next. Chapter 32, here's NVIDIA. This is held up very nicely with the AI stuff. Chapter 33, Google. As you know, the Google's been very strong. KISS System's been long this, and it's broke out here this week so far, this ascending triangle. Next. Chapter 34, Tesla. This is a 2-hour chart. Remember on my weekend newsletter, I had this as a setup, a bull pennant setup, and it's played out beautifully if any of you bought this. Nice trade from that 237 breakpoint. Hope some of you guys caught that puppy. All right, guys, let's move on to some indicators. So a couple things to be aware is short term that I'd be a little cautious. Here's the VIX. So the VIX did close back below its lower Bollinger Bands. RSI 5 is getting oversold. So this is important because a close back inside the lower bands would be a VIX S&P sell signal. Okay, you can see this. Last time it closed inside the upper bands, that was a buy signal. That was a good buy signal. Next. Chapter 36, here's the VIX and the VVIX. Now the VVIX has been much weaker than the VIX. It is now into a little supply zone. It is getting very stretched here. Let's take a look at the next chart. So chapter 37, here's just the VVIX chart itself. Again, you can see it's been below its lower Bollinger Bands for a few days. You got a doji here. So this may be getting close to some sort of bounce. Finally, chapter 38, here's a 60-minute chart. Not a strong MACD divergence, but you definitely got some MACD divergence here. You can see momentum's waning. So we'll see it. This could be due for a bounce soon and likely get a market pullback. Chapter 39, here's the PMO system. So despite the rally up, this still has not had an up candle off the zero area. Quite interesting. Next. Chapter 40, here's the S&P XOP ratio. Market tends to follow this. And a positive perhaps is that this ratio made a new high. The S&P, or the ratio made a new high and the S&P up here is not. But this could go either way, but there is a divergence here to be aware of. Next. Moving to bonds, chart 41, high yield corporate. This has been one area why I've been positive on the market because the high yield corporate's been pretty strong and the market tends to follow it. And it was basically flat today, but overall it's still a bullish looking chart. Chart 42, here's TLT 20-year bonds. Remember I talked about this doji candlestick a couple weeks ago. That was a good buy opportunity off that doji, and it's been a great buy. That's helped the market rally. Chart 43, here's a 2-hour review. So a couple weeks ago, I drew this falling wedge, which obviously played out. We've had a nice rally. And even on Monday's newsletter, I said this is a bullish consolidation. I favored higher prices, and that's what we've gotten. One option, guys, because we did have a symmetry break on this rally, the wedge, this rally exceeded the target of this wedge. We have what could form a potential inverse head and shoulder. You can see the left shoulder, right shoulder, or left shoulder head. And then you can see, especially if we rally up a little bit more, then pull back, we could form an inverse head and shoulder pattern. And actually, that would really set the market up for potentially a bigger rally. Next. Chart 44, there's that monthly chart with this potential 5 waves. Fifth wave is not in. I do think this still has potential to come down to there over time. Next. Chart 45, here's the 10-year treasury yield. Nice pullback now from that resistance. But again, overall, does the chart look really bearish to you? No. In fact, I could see this eventually setting up to some sort of cup and handle. Next, chart 46, there's the weekly or the monthly view of the 10-year treasury yield. You can see how it's been pulling back off this supply zone. Next, following up on some of the market sectors, here's XLK technology. Again, just like the market, nice rally off those lows and slightly above the 61.8 fib now. Next, chart 48, banks. This area has bounced a little bit too, but doesn't look great. It's just an oversold little bounce here at the moment. This area obviously struggling. Chart 49, energy. This area still holds up extremely well. Next, chart 50, here's the weekly view of XLE Energy. And again, you can see overall it's forming a big weekly coil. Looks bullish long term. Next, chart 51, oil services. Nice rally this week, up 3.25%. You can see, a few weeks ago it pulled off the supply zone, but trying to find some support here. You got a big thin zone up here, which price could easily melt up to over time. Chart 52, here's the bullish percent energy index, BPNR. It is pinched to hell with the 20 MA here, the 9, the 20. It's right on here. Again, as I illustrate here, because it's right on here, it's either going to rebound up, maybe go to the upper 90s for one last push, and then it tops, or it pulls back now. I could see either one of these playing out. Again, that's short term. Long term, I think this area is going to go a lot higher, but short term, these are the two options I'm watching. Chart 53, materials. Nice rally off the 200-day moving average, to be expected. And chart 54, home builders. Remember, this is a nice short idea of mine a few weeks back out of this little rounded top. We busted down hard. Hopefully you took your profits. It's come all the way back now to this trend line. But this is an area now to watch for a potential reversal. In fact, you could look for a short right there with a tight stop. Next, moving on to commodities, chart 55, DBC. Again, this is the wedge we broke out of in July. Pulled back, ABC pulled back, bounced off the 200-day moving average. Moving average ribbon was pinched. Next, chart 56, there's the weekly. Again, long term looks good, rallied off the 200-week moving average in the summer, broke out of the wedge, holding these moving averages. If the US dollar starts pulling back more, that could help this area. Chart 57, there's the monthly. Again, look at this long. I like to show the monthly here once in a while, guys, because to me, this just looks like a big ABC pullback in a bull market. Look at your moving average ribbon pinching. Again, you could be long. This could be a long-term long with a long here. Stop right there at that 22 low. Next, chart 58, crude oil. So far, nice rally off that higher low. Remember, it's been holding above the 200-day moving average, which is the positive. Chart 59, natural gas, starting to pop again. Again, long term, it's still in this long-term base, but eventually, if it can break out of this base, I think it's going to be a hell of a trend trade. These are the ETFs to monitor. Next, chart 60, here's Boyle. That's the leveraged ETF. Again, it's been choppy. We had a little trade back here. I went back long again this morning, so you could have a stop essentially right at that 58.07 low. Next, chart 61, there's that natural gas stock ETF. It's moving up. Next, chart 62, copper. No changes, still the same pattern. Chart 63, DBA. Again, beautiful rally off this trend line that we had in place. Next, chart 64, uranium. We've been talking about this for a couple weeks. It's been moving up nicely. Next, chart 65, there's the monthly view. Again, uranium started a bull market in 2020, and to me, this was a bullish long-term monthly consolidation pattern. We're breaking out of it. Moving average ribbon's expanding. This looks good. If this were to really play out, I could see this sucker going well into the 30s, which would be a heck of a percentage move. Jabber 66, CCJ, one of the Bitcoin stocks, has obviously been moving up in tune. Next, Jabber 67, Bitcoin, again, had a nice pop yesterday. Today, more of a consolidation. Next, Jabber 68, Mara, again, consolidation day today, but one hell of a trade yesterday. It was up 20-something percent. Again, guys, this has been on a watch list. I've been stalking my newsletters and videos. You know that. We had set up a positive divergence here in the RSI, but we had pulled back into this demand zone. We were at the upper portion of the demand zone. We didn't know if it was going to come down and test this 200-day moving average here, but you had a doji here, black candle doji. When you see something like that, and then you had another doji, you can have a very tight entry right over the doji and put an immediate stop at the low. You see, and that's what trade's all about, guys, having a very tight entry and stop. Take a look at that. Your risk was nothing. And then this move ended up being like 5 times what your risk was, like a 5-to-1 ratio. That's what trading's about, guys. Not knowing exactly what's going to happen, but seeing a potential setup and having a logical entry and stop. Okay? Next, Jabber 69. Here's the 2-hour review as I discussed. Your evidence was this MACD divergence on this time frame. That confirmed that daily chart above. And right now, even with today's consolidation, this still looks pretty good. Next, Jabber 70, Riot, you had the same pattern. I like to trade Mara, though, over Riot. And finally, Jabber 71, Wolf, also had a nice pop as well. Again, they were all set up, guys. Next, Jabber 72, US dollar. So far, nice pullback this week, as you can see. Next, Jabber 73, there's the index, again, pulling off this supply zone so far. Next, Jabber 74, there's the weekly. Logically, it's pulling back off this upper channel that we've had in place. Moving on to precious metals. Jabber 75, gold. So far, gold's been up the last couple weeks. Again, I don't know if this is the final low or not for gold, but it has been moving up, and the stocks have been outperforming a little bit. Next, Jabber 76, there's the weekly. Again, you can see overall the long-term weekly pattern here. Keep an eye on the ratio. Next, Jabber 77, here's the Japanese yen versus gold. The two tend to be very correlated. One thing to note is the yen has been weaker than gold here, so you have a divergence set up at the moment. Jabber 78, silver. Again, nice move. Actually broke out of the pattern today. Jabber 79, there's the weekly view of silver. Again, ignore this head and shoulder here, but again, basically look at, we got a coil here. We'll see if we can break out of the coil. The bullish view long term is this big inverse head and shoulder. Jabber 80, here's the monthly chart. And again, if silver can ever clear this good long trend line here, going back to 2011, it could have a heck of a move. Jabber 81, GDX, again, nice rally off this demand zone. See how powerful those demand zones are, guys? Pulling back today a little bit, right off the 50-day moving average, which is logical. Next, Jabber 82, BPGDM. No changes here. We don't have a buy signal on this yet. Remember this one on a sell signal back in April? It was a good sell signal. Jabber 83, here's GDX in a 2-hour time frame. So this set up for a good bounce, guys. Like I said, we had a bullish symmetry break here back in mid-August. That was bullish. Then we pushed higher. Then we were looking for a higher low, which we got. And we moved up nicely. Jabber 84, there's the 60-minute chart. Next, Jabber 85, MUX. This was a long idea in Monday's newsletter. I said it had a bull flag here, and it popped out the last couple days. Jabber 86, KGC, another gold stock. It's been moving up nicely. All right, guys, following up finally with some trade ideas. Jabber 87, OSG was a long idea of mine on the weekend and on Monday. And look at this nice follow through the last couple days. Jabber 88, JBL, another one from Monday's newsletter. Nice pop yesterday and was up today. Why did I like this pattern? Because you had a breakaway gap, you had expanding volume, so it gave us a nice trade. Trevor 89, MODG, another one from Monday's newsletter. Nice pop out of that base. Charmer 90, Airbnb. I had it as a coil either or on Monday. Popped out of here yesterday on nice volume. Gave you a nice trade. Charmer 91, NWL. This was a coil setup from Monday. It just broke today. We'll see if it follows through. Chartbert 92 AFL. This was on Monday's newsletter as well. It's been moving up a little bit. Chartbert 93 VNet. I showed it on Monday. Beautiful base. Chartbert 94 Jacobs Engineering from one of our subscribers. Coiling, still a pattern to monitor here. It is kind of thin though. Chartbert 95 JetBlue. I showed this on Monday. I like the positive divergence here, but we still don't have a trigger here. It's still falling back. So again, you need to see a break over this out of this wedge to consider a long. Here's some new setups. Chart number 96, AMAT, potential breakout. Chart number 97, AVPT, another breakout. Broke out of this resistance here. Closed right on resistance here. Looks good. Chart number 98, BLMN, another potential breakout. And finally, final chart, number 99, BAM, another potential breakout play. All right, guys, that'll do it. Quick check on the futures. ES futures are up 3 points tonight, so not much going on as expected. All right, guys, have a wonderful evening. See you tomorrow. Take care.